Hello, sir. So we are here to present Finance EL. So here with me are my team members, myself Smith, Prajwal, Shivam, and Vijay. So Shivam will be starting with the presentation.
So our topic is international financial management. So it is a practice of managing companies' financial activities and conducting business across borders. So our topic almost consists all these parameters which are mentioned here, like currency exchange risks and international investments, financing and working capital. So these are the indicators and which can be used to optimize global financial performance. So IFM is essential for many multinational companies, and yeah, these help us to navigate diverse financial regulations and currencies and economic environments. Next slide. So the key issues with the international financial management is foreign exchange market. So as we know that the foreign market is the global platform for currency trading with exchange rates fluctuating due to economic and political factors. Companies use hedging strategies to mitigate the impact of diverse currency movements on their financials. So exchange rate risks. So this is the main indicator while trading internationally, as this helps in predicting the country's economy and also uh, exploring the potential of the rising dollar market. Then comes international capital budgeting. So this process involves evaluating long-term investments in different countries, uh, considering political and exchange rate risks. And these techniques like scenario and sensitive analysis for decision making. Next slide. Next slide. So international financing. So these companies raise capital internationally through instruments like euro bonds. So these are the bonds in which the bonds are issued in the currency which are not in the native country's currency, and GDRs and ADRs, and enabling them to access a broader investor base and manage multiple currencies and regulatory environments. And then comes the multinational capital structure. So the multinational corporations must optimize their debt and equity mix across these countries, and balancing tax benefits and risks like political instability and currency fluctuations, as it also depends on the government which favors these multinational corporations. So these will help in benefiting them through taxes and getting cheap labors. And then comes political risk management. So this involves managing political losses due to political changes in the country, using strategies such as insurance and joint ventures and geographical diversification to mitigate risks. As we know that in some geography, the economic activities are not that prone to happen. For example, northeast region of India, as consists of many hilly regions, and there are few regions where the economic activities can boom. So these are the regions which are near to coastal areas and in the central parts of India the where the geography is even. Then comes international taxation. So companies must navigate multiple tax laws and avoid double taxation using transfer pricing and tax treaties to optimize their global tax strategy and minimize liabilities. Next slide. So this is the case study of XYZ Electronics, and this company was founded on 1990, and the headquarters are in Silicon Valley, California, USA. And these company mainly produced smartphones, tablets, smart home devices, and home appliances. And this is the industry based on consumer electronics, and the revenue is around 15 billion in 2023, and the global workforce is around 45,000 employees, which is quite huge. And the major markets are in North America, Europe, and Asia. Like, so um, we have we have estimated the exchange rate risks in this company. So the we have predicted the EFM issue and the challenge and the strategies to overcome and the outcome of that of the EFM issue. So as we can see that the exchange rate risk um, and challenge faced by the company due to fluctuations in CNY or USD and impacting profitability due to foreign currency revenues and USD based costs. And the main strategy used by this company to overcome such exchange rate risk is by using hedging with forward contracts and natural hedging by sourcing locally. And the outcome of this was the company was able to protect currency fluctuations and stable earnings. And then comes the political risks. So the challenge faced here is the potential changes in policies and trade restrictions and expropriation in China and India. And then the strategies used by it to overcome was purchase political risk insurance and form joint ventures with local partners. And then the outcome of this was it was able to reduce financial exposure and secured favorable local terms. And then the third factor is the international financing.
Shivam, I'll continue from here. So the third factor is international financing. So the challenge in international financing was securing $700 million in capital for expansion with competitive rates while managing currency risks. The strategy to overcome this issue is the company issued USD denominated euro bonds and obtained CNY denominated loans from local banks. The outcome was they got lower interest costs and they minimized their currency risk. The fourth IFM issue was international capital budgeting. The challenge the company faced while facing this issue was evaluating the feasibility of manufacturing investments in high risk countries like China and India. The strategy they used to overcome this challenge was the company used adjusted discount rates to reflect higher risks and performed a scenario analysis. The outcome was they got approved high return projects and deferred the low return ones. Next factor is international taxation. So the challenge they faced was minimizing global tax liabilities while complying with tax laws across multiple countries and avoiding double taxation. The strategy they used to overcome this problem was they leveraged the tax treaties, established facilities in SEZs, and maintained compliant transfer pricing practices. Then they achieved significant tax savings and optimized effective tax rate. The next issue was transfer pricing. So the issue was managing intercompany transactions to comply with international tax laws while optimizing global tax position. The strategy they used to overcome this was they set the transfer prices based on arm's length principle, conducted benchmarking studies, and maintained thorough documentation. The outcome was they mitigated risk of disputes with tax authorities and optimized tax position. The last issue, the last IFM issue the company faced was working capital management. Efficiently managing working capital across global operations amid differing payment cycles and banking systems. The strategy they used to overcome this challenge is they optimized cash conversion cycle, implemented JIT inventory practices, and established local banking relationships. The outcome of this was they improved liquidity and operational efficiency, reducing reliance on external financing. So the conclusion for taking this case study was XYZ Electronics through careful planning and execution of IFM. So they have implemented IFM in a great way and used IFM strategies to improve their company structure and the finances across different countries. They successfully navigated the complexities of expanding into China and India. The company effectively managed exchange rate risks, mitigated political risks, optimized financing strategies, made informing capital budgeting decisions, minimized global tax liabilities, ensured compliance with transfer pricing regulations, and efficiently managed its working capital. So we have made a small project related to taxation. So that will be explained by Prajwal.
Well, thank you, Smith and Shivam, for the introduction. So, I would be heading towards the presentation of our project. So, this is our project. So, we are basically using a basic Python tools and APIs to calculate and predict uh, risk management, NPVs, and hedge funding and insurance over political uh, issues and etc. So we would be also simulating exchange rate simulation. So NPV calculation, as mentioned above, would be also calculating.
Prajwal, your screen is not visible.
1 second. Thanks for letting me know. So sharing the screen. Yeah. So yeah, as I was mentioning, so we are using AI tools like Grok AI for our report and analysis generation. So we are taking the calculated amount or the figures to Grok AI, and we are also taking live interest rates, uh, exchange rates, and even financial market conditions right now using the exchange rate API, which gives us all information in JSON and text files, so that the application which we create, which we have created, uses it for its calculation. So we are using, to be precise, 3 4 widgets. So these 3 4 widgets would have exchange rate, hedge funding calculation, and NPV calculation, insurance calculation, interest saving calculation, and additional we would have an AI feedback window, or we can directly access Grok AI using the button which is there in the application. So coming to insurance, I would be precise. Political risk insurance is like very sensitive matter, because a government can, if a state is not stable, can overturn in overnight. Like example, Bangladesh or Sri Lanka. In future, there will be many countries which has poverty rate skyrocketing. So this would help many companies and financial institutions like JP Morgan and Chase, and also Deloitte and ENY. Such companies do have such applications where they calculate the risk, calculate the risk involved in investing in that country, and they would provide it to the clients who are subscribed to their subscribe to their service. So to be precise, we would be going to how the application works. So here we have already ran our application, so pre-run it, so that there would be a good way of explaining it. So yeah, this would be this is a application visible. I'll put it here. Yeah. So this is a revenue in CNY. So CNY we use the Chinese import rate right now, so that we have a stable input and output. But these rates of Chinese and USD vary day to day. So we are using an API to uh, have a precise exchange rate. So we take 22,000 as a revenue, and we take the initial rate would be around 10%, and our final new rate would be around 2%. So we get a pop-up saying that the change in revenue would be around 8,800, where the impact of the exchange rate would be. And we would also be calculating the new revenue, which would be around 11,000. 11,000. So, and the initial revenue would be around 22,200. So that's what this exchange simulation risk would generate. So edge percentage for, so that once we click OK, so we would have the same analysis done by the Grok AI. So the Grok AI would explain us how the impact was. So it would take the initial and minus 10, which would be the initial and the new, and by 22,000, which would be negative. So there would be a loss in the calculation. So in simulation, apparently it contradicts the actual calculation. So we can take this as 2 and this as 10, which would give us a profit of which would not contradict the simulation, which would be the change would be minus 8,000, but it won't contradict the exchange rate. So as you can see, it has explained how the initial and final exchange rate are, and it would calculate, it would convert CNY to USD using the API, and also the impact would be around minus 8,000, which would be in loss. So the potential mistakes we can consider is around, it can be either units or rounding off, or it would be basic mathematical issues, which is generated for every calculation for a precise calculation. And improvement, as we can say, the country can improve on certain things. So we are limited to USD and CNY, so we aren't mentioning it. So coming to hedge funding percentage, so we take 10% of hedge funding and forward contract rate to around 2%, which would give us a total revenue of $11,000 again. So unhedged fund would be 9,900, and whereas the hedged fund would be 1,100. So coming to net value, net present value. So to check the discount rate, we would enter it as 20%, and here we have to enter it via linearly. So this would be a linear case where, as mentioned, it would have a linear graph or a uniform graph, not to be precise. So let's take 4,000. So calculate, it would give us a net present value. So once we plot the graph, yeah, so this would be a, I guess it went off. Yeah, so it's here. Yeah, this would be a uniform graph where you could see the points are evenly distributed around the period. This would be the cash flow over time. Whereas if I change for an ununiform graph, we wouldn't actually have a uniform graph, but we would have similar expectation from the graph. 1 second. We would be, so this would be the graph. So as we are dealing with smaller amounts like 1000 and 3000, between 1500 to 3500, so the graph would look almost uniform. When it comes to a large amount of hedge funding, NPV, and uh, cash flows, uh, we would have a non-stable graph or sometimes a graph with a dip. For example, to showcase that, we can change the last value as cash flow as 1800, which would show us the NPV, and this would be the graph. So this would be an show depiction of cash flow and period. And political risk insurance calculation, we would take the investment amount as $10,000 and premium rate as 2%. So it would give us a political risk insurance would be around $200. So this is not linked to an API, but we have linked to a basic percentage. But this does have a API which can calculate political risk based on an AI which would scrutinize all newsletters and check whether there is a stable government or the market is working well, etc. So coming to the last part of our application, that would be interest cost saving calculation. So we just enter the capital amount as 1000. So domestic rate would be like the Indian rate would be around 2%. So let's take 2% and euro bond as let's take 3%. So we can calculate the interest. So euro bond would be going in negative when we take it as a domestic rate. But if we take this as 1 and this as 10, so if the domestic is high, as because euro bonds are usually more than what the domestic rate is, so we would have a profit around $90. So this is what our application does, and this does also recommend the analysis. If not, if by chance there's any question to be asked, so as we have integrated Grok AI, we can ask Grok AI here. So it will give us a solution like rate in India for loans. This would be a basic question. Sorry for the error there. So you could see it would give the interest rates for loans varying on the type and lenders. So we would have all percentage loans, personal loans, compound interest, annuity, and type of loan, like for example gold, consumer, and education loans. So we'd get all information regarding our financial credit lending, etc. on this application using the Ask Grok AI feature. So this is the end of our application. I would pass it on to Smith.
Yeah, sir. So that's it with the presentation. So
So
we'll be ending the.
we thank you for the opportunity and thank you.
Thank you. Thank you.